into the Realty with T3. I'm your host, Tisha Harris, and I'm also the team leader of Texas Trio Team. Got a guest that's been on with us before, and we are so excited to have them back to talk about what's going on in the market and how we can help you if you're ready to get off the bridge and do some home buying or home selling in this summer market. So who are you? Just in case anybody doesn't know.
Absolutely. My name is Joseph Medrano with the Planto team at CrossCountry Mortgage.
Chris Planto with CrossCountry Mortgage.
All right. And so we're going to really dive into what is going on with the market because everybody asks us as realtors, what's going on in the market? And so we just want your insight of what you're seeing and kind of what you are suggesting to the people that you have in your database.
So I'll take that away.
Yeah.
So basically what we're seeing right now is interest rates are the best we've seen in I'd say over 2 years. We're seeing a lot of activity. We're seeing multiple offers on properties, which is something we hadn't seen here as of late. And it's pretty exciting actually. And for sellers, their homes aren't moving. I'm recommending that they offer seller concessions to help the buyer buy down the interest rate, at least for the first year, doing either a temp buy down or a permanent rate buy down. I suggested that to one of my clients who's looking to buy and sell, and his home, his home has not been moving. It's been listed for a few months, not with Tisha, obviously, otherwise it would have sold by now, but with the particular realtor they chose and with the current market conditions and whatnot, it's just not moving. Well, he offered the 10,000 seller concessions and hooked me up with the buyer. Anyways, the loan's in processing under contract and we got a clearly defined closing date. So consider something like that. Consult with us and we can better advise you on how to move your property or how to get into your next property at today's low rates.
Right. And I had just done a video on our social channels that there's like 3 things this summer that, are why you could buy a home. And so like the first thing is going to be like buyers have a lot more inventory to look at. And then there's also negotiating power. And then you can also ask for a lot more things than you typically could have maybe a couple years ago. So are you seeing that a lot more on the contracts that you guys are doing?
So I haven't seen that a lot. I have been seeing that quite a bit. But now literally within the last couple of weeks, I'm starting to see these multiple offer situations. And so you're going to see that less and less where you're able to get the sun and the stars. So my advice is you contact Tisha, one of her teammates, as soon as possible and get out there and start shopping. Because the longer you wait, the tougher it's going to be. We're just entering the summer here. We're just hitting our stride. Things will pick up before they slow down. So if you're in the market to buy, you need to get out there and start shopping right away. Don't wait.
Absolutely.
It's only going to get more challenging for you.
Yeah, and actually Joseph and I were just looking because I had done a research on just for I think we're in a condition right now with the listings that we have is they're staying on the market a lot longer than they were in the past. And so that can be discouraging to sellers. And then realtors are having to show, like, what are you doing to sell my home? And so I was doing a report and originally I had said there was 58 homes on the market in Brenham, but when I had done that analysis, that was between 200 and 300,000 a couple weeks ago. So Joseph and I were just sitting here and we were like looking at what was going on in Brenham today, not Washington County, just Brenham overall, single family residences. There's 153 homes on the market.
Are you serious? I would never have
Crazy.
that. That's wild. That's a great opportunity right now that buyers have. I've never seen that much inventory on the market.
Yeah. And just in Brenham. And so there was about, 39 new construction. So, that's still a large piece of the market. But there is so many homes on the market that if you are on the fence about buying, like now is the time to do it.
Absolutely. It's the time.
Yeah, the buyers are pretty much getting the kind of deal that is perfect for them. For example, we have a buyer that's looking to purchase here soon. He's getting the house off market, but because of the state that the market is in, the price that the seller was going to list initially wasn't going to work out anyways. It was going to come down from 275 to 250. Like, it was going to happen based off what's going on right now. And we're also able to negotiate, $12,000 in seller concessions and pretty much get their closing costs covered. And that's just because of what's going on right now. So I think right now is definitely the perfect time to buy.
Yeah. Every market's different, guys. And I was speaking in generalities earlier. What I'm seeing, I mean, I'm really seeing, because I've been out in Washington County about 13 years, but I still do business out in Houston and Spring and Conroe and Villas and Galveston. And I've been in the business 23 years, so of course it takes me all over. I do loans out of state too, but this is my backyard. I live in Brenham. I reside here. I've got an office across the street here from Tisha. This is my true love is the Brenham market. And I'm really shocked to hear that there's so much inventory, and I'm encouraged by that because Brenham is not caught up to Houston yet. And that's a good thing. That's not a bad thing. That's a really good thing because in Houston, that's where I'm seeing the multiple offer situations. The buyers are getting less, the sellers are getting more. It's turning more into a seller's market than a buyer's market in Westview and other areas of Houston. Here in Brenham, we've not experienced that yet. We will. It's a matter of time. How soon do you want to? Let me phrase it like this: Do you want to get in while the getting's good, or do you want to sit on the fence a little bit longer and wait till it gets a little bit tougher for you? If it were me, I'd be looking to buy right now.
Yeah, and I mean, so looking at kind of what is going on in just the general market, it's like the Feds came out to this morning and said that they're kind of expecting that rate cut to happen in September,
Mhm.
maybe two this year. And so, with that being said, I mean, I don't think that's the wisest choice to wait until September.
Yeah, because it may not actually impact the rates that we see on the rate sheets, guys. This is the federal funds rate, the rate that banks charge one another. It impacts home equity lines of credit. It impacts credit card rates. Consumers are not educated on what it actually means when the Fed cuts the rate. They think that automatically, oh my God, the rates, they drop from 6.75 to 6.5. That's not how it works. Not at all. If you would like to discuss that further, give me a call.
Yeah, I mean that's so true. And um right now, kind of in our brokerage and like our team is we're hearing a lot from the outside. Like you said, like some people just aren't aware. They're seeing the headlines on the news and things like that, which may not be the most insightful information. And so it's more of like, oh, it's a buyer's market because there's so much inventory nationwide and things like that.
Mhm.
But I don't necessarily feel that way. I feel as if it's more balancing out and it's giving the buyers a lot more room than they had a few months ago or even a couple years ago. But that doesn't mean that they are taking control. Like you said, you're seeing it
That's
like
right.
Harris County and places like that, that it's not so, you know, not buyer friendly, but you know what I mean, that there's so much
Yeah.
wiggle room.
Exactly, exactly. And on just to kind of piggyback off of what we were saying earlier too, and that's a great point. Was I've actually been in communication with a couple of clients that have been looking for a home, I guess you could say, for the last couple of years, but renting in between. And every time that lease comes up for renewal, they're like, okay, rates are doing this or rates are doing that. And when we talk, and I'm encouraging, of course, and the last conversation we had, which was we had multiple conversations over the last couple of years. And I've encouraged them, hey, you need to stop throwing your money away on rent. You need to buy a place of your own. 2 years ago, interest rates were about 6.5 to 6.75 on a 30-year fixed. Today, they're about the same. So what's changed, right? So, he spent 5 grand a month on rent. So do the math on that times 2 years. Had he bought a home 2 years ago at the rates, the rates are what the rates are, date the rate, the home, That's my philosophy. Rates come down, we refinance, and in between, you've got home ownership, you're getting tax deductions, writing off property taxes, writing off interest on the loan, you're building equity through appreciation, because that's one thing that has not stayed constant. While the interest rates may have stayed about the same, fluctuating within 0.25% to 0.5%, We've seen home prices rise 3, 4, 5, 6, 7, 8, 10% in some areas. So think about that when next time you're sitting back waiting on the Fed to make a move and hoping that the rates drop enough to where it's going to make a big difference in your monthly payment. It's probably not, but you could sit back on that like these folks have, or you could take action and build some equity and get some tax deductions and wait on rates to dip while you are a homeowner, and then you just refinance the loan. It's simple.
Yeah, and so one thing that I'm just kind of experiencing in my own life, and just it seems like everybody that I'm talking to is just like it has been so busy. Like life is so busy. It's just like you're running kids, you're running errands, you're going on vacations, having a good time. That it may not be the most um ideal time for a lot of people. It seems like one of the slowest Junes in business that I have experienced, but that doesn't mean that there's not people in the pipeline that eventually want to do something. It's just like they're kind of setting their priorities a little differently than they have in years past.
That's right. I mean, people are going to take the summer vacations and everything, and we all should, find some time to get away, especially if you've got kids, take them out, shake that restlessness out of them and, go on a nice vacation, get away for a little while. But when you get back and get settled, get back to priorities. And, if buying a home is one of those priorities, then take it seriously.
For sure. And so, Joseph, I want to kind of ask you, like, whenever you're working with your clients, are you seeing that insurance is really impacted, like what's the word I'm thinking of is like their decision making because the lack of the ability to get that?
Yeah, absolutely. Insurance can play a huge factor, especially for, people that are kind of locked into, their yearly wage, and they're already pushing the edge of, their ratios. The insurance can make or break a deal, but luckily we have a good insurance that we refer pretty much all of our deals to, and he is able to work with us and get us the type of insurance that we need.
So have you seen that change like in the past like year or so that like it's really making or breaking deals, or is that kind of always been that way?
I've only been in this about 3 years, so my experience is pretty limited, but, I have seen that, here recently with some buyers, on the, kind of brink of, pushing past qualifying guidelines, they are, kind of in the fate of what the insurance comes in, and it varies in the area and the type of home it is and that those kind of things.
Sure, absolutely. And so, Chris, I want to talk to you about. So I know we all like on your side of things, and then on ours, there are like nail biter moments that we have to endure. Like, it's just like you. And so, with the changes that are happening with appraisers, like that are coming up, do you have any insights or anything that you like are bracing for with that?
Yeah, of course, of course. So with appraisers, I mean, appraisers aren't everybody's one love, I mean, appraisers are kind of hit or miss, but we vet our appraiser roster with CrossCountry. We handpick the appraisers we want on the roster. And that's completely legal. We can't control who an appraisal gets assigned to in a particular property. That would be illegal, if that's a word, whatever. I know it's a word, but I don't know if I said it correctly. Illegal. Anyways, so bottom line is we've got top tier quality appraisers that have been doing this for 15, 20 plus years. And so we're getting the cream of the crop, the best of the best, very experienced appraisers. Whereas with some lenders, they don't have the knowledge, the know-how, the wherewithal, the ability to handpick their roster. I run my own branch, so I can basically do whatever I want to do within guidelines and within integrity standpoints and whatnot. But um, we really don't have problems with appraisers, but I hear a lot of problems from other lenders. I've got other buddies that are in the industry, and they're always complaining about this or complaining about that. I mean, I will say that when it comes to appraisals, I mean, about 98% of them make value or exceed value. We rarely have a value issue. When we do have a value issue, then we're going to reach out to, let's say, Tisha, you're representing the buyer. So we're going to reach out to you and let you know, hey, the appraisals come in 5 grand low or 10 grand or whatever the case may be. Maybe only be a couple grand. And so you're going to look to see if there's some comps. You're going to take a look at the report, obviously, take a look at the comps that were used, see if you can come up with some additional comps that we can dispute the value. And in that case, we'll go back to the appraiser asking for a reconsideration of value and saying, hey, consider this. Um, sometimes we get the listing agent involved because there's so wide of a gap between what it appraised for. Maybe there's just very little comps and how the home was priced or whatever. And we need some more clarity. And sometimes they see that they just kind of pulled a number out of thin air and said, hey, we're going to slap this price tag on there. And some buyers came along, fell in love with the home, and we're going to pay that price, because the home's only worth what somebody's willing to pay for it, right? Um, so anyways, the appraisals go pretty smooth. I don't have any complaints about that, but backing up to the insurance, I had one yesterday. And let me tell you guys, this is what we do. Whenever you as a client are pre-approved with us and you bring us a property address that is one of interest to you, could be one property, could be 10 properties. We're going to get insurance quotes on every single one. And they're going to be at the lowest deductible. We're not coming back at you with 5% deductibles or anything that's going to break the piggy bank should you have a claim on your property. We're going to get you, good coverage, really good. We're going to do the best we can, and then the premium, see what that looks like. Had one yesterday, came in at like $3,300, just small home, $160,000 home, but it's old. It's an older home, and the older homes sometimes, not always, can be a little bit more to insure. Not always, but sometimes. And just the location of this particular property, as well as the age of the property and the composite and this and that and all, the insurance was probably double what the consumer was thinking in her mind. So does she qualify for the loan still? She does in this case, but not everybody would, right? So just some loan officer saying, hey, it's $100 a month or $150 a month is very misleading to clients. And I hate that loan officers will do that. They'll just, hey, property taxes, $400 a month. Hey, insurance, 100, $150 a month. No, I look up the property taxes. Joseph looks up the property taxes, every single property. We get quote on every single property on the insurance. We get numbers to you dialed in, and that's the way it should be done. That's the only way to do it because it's the right way to do things. And that way, there's no misleading. There's no, oh, shoot, okay, great. Now we're under contract. Now we started shopping the insurance and it's double, triple. And now buyers already got buyer's remorse and haven't even closed on the property yet.
Yeah.
Worried about that.
Yeah, 100%. And so, I mean, like, that's adding in value for your clients that you didn't have before, um, that they may not have experienced before, is how I should say it. So, I want to ask, as far as managing, like, the amount of or the lack of business that may be taking place right now, like, we have things that in fundamentals that worked as far as, like, what got us to this point, but are you having to go in and kind of finesse your client base and your database a little bit more than you had to in the 3 years of doing this or the 20 years of doing this, just to, keep going because people are so much on the sidelines?
Yeah, I think it's really important to educate your clients, and I feel like there's been a lot more of that going on over the last few years. I feel like it used to, I've never considered myself an order taker. Okay, 30-year fixed, 20% down, escrows, no escrows, this, that, the other, I mean, but it kind of was sort of like that, like years ago. But nowadays I mean, you got to get these higher interest rates. And again, the rates are about the same they were a couple of years ago. They're just a tad bit lower, but they haven't been real choppy up or down, significantly either way. But I feel like over the last few years, we've got to get a lot more creative. We're doing 3-2-1 buy downs or 2-1 buy downs or 1-0 buy downs. And those are where you can get much, much lower below market interest rates for up to the first 3 years of the loan to help basically coast through that period of time between the Fed actually, excuse me, not the Fed, but the mortgage-backed securities, working through, and we're actually seeing some rate reductions actually on the rate sheets, and seeing those rates maybe back in the fives or the fours or so. At that point in time, I think things will be a lot easier for us and a lot easier for consumers. But, you know, but people still need a roof over their head regardless. They're going to buy and sell homes regardless. And so I think it does take a little more finesse and a little more education. We're here to educate folks and to help them and guide them.
Yeah, absolutely. And so for the people that are like, more off the fence than they were yesterday, what's the best way that they can reach out to you or find out to get more educated on a topic they may have questions about?
Yeah, so I mean, they can shoot me a text. I'm at 832-731-6560 or an email at chris.planto. That's plant with an O at the end, Planto. So chris.planto@ccm.com. Or just give me a call. I'm old school. I like to have a conversation, you know. So many people these days, they like to text and get quick answers or email, and I'm cool with that too. I mean, I'll communicate however a client wants to communicate. I'm gonna throw up a smoke signal, I'll respond quick, whatever. Don't matter.
Yeah, and I mean, thank you guys so much for coming on again. We always love the education you give us and the insights you give our viewers. And so I think that it's so valuable that you come on with us and talk about what's going on so people can make more informed decisions. So thank you so much for coming on.
Hey, thanks for having us.
Pleasure.
We always enjoy coming to visit, so let's do it more often.
I know we keep saying that.
Yeah.
But if you have any questions for us, you can find us at texastrioteam.com. Thank you so much. Take care and keep living your best life.